No, but I also don't think it's the financial crisis
Okay, that's
because we
important.
have the magic bullet, which is quantitative easing. So in a financial crisis, if your collateral is going down, you go bust. But what QE does is make your collateral go up optically in price. And so it stops the bankruptcies. Doesn't mean you repair the P&Ls or anything else, but if your collateral doesn't fall, you're okay. So I don't think it can ever get as bad as 2008 using this particular mechanism. There's an outside chance for sure. I don't think so.
Bitcoin has decoupled from stocks and continues to rise 10 years after the Cyprus banking crisis coincided with a BTC price boom. The market capitalization of Bitcoin has added $194 billion in 2023. Its 66% year-to-date YTD growth vastly outperforms top Wall Street bank stocks, particularly as fears of a global banking crisis are rising. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul Powell updates his outlook for the Silicon Valley Bank collapse. Who or what is to blame? And also, what does this mean for the VC industry?
Right. We are in a world that is complex and kind of fucked. From demographics, debt, geopolitics, all of these things together are making everybody scared, confused. We didn't imagine when we started this, when we highlighted this, when I kicked it all off 2 weeks ago, that one of these shoes was going to drop. In fact, two of these shoes were going to drop. The other one was technology. And in the course of this 2 weeks, the banking crisis happened and this technology nuclear bomb has just happened. But Real Vision was set up exactly for this, to navigate this. We came out of the financial crisis and the European debt crisis and the banking crisis, and I knew I had to do something about it by helping people. This is our chance to help people. So listen, anybody watching this, I know you've got lots of questions. You're probably nervous about your investments. You're probably nervous about your future. You don't really understand what's going on. That's what we're here for. It's not my voice. It's all of these experts. We all have different opinions. We're all trying to add weight and understanding to what is going on. It's very simple forms. The rates are too damn high. The yield curve is inverted. Banks can't make money. So they're falsely making a yield curve by having deposits at 0.5%, as opposed to paying 4 or 5%. So they're falsely making a yield curve to try and make profits. Problem is, every depositor just goes and gives it to the Fed directly in Treasury Direct or a money market fund. So you've got deposit flight. And on the other side, the asset side of the equation, when those deposits leave, they need to collapse the other side of the trade, which is the lending that they've done in the government bond market, and they've lost money. So it's a disaster. So what the Fed are doing are like, oh, well, let's get everybody together and just paper over the cracks of the deposit or the other side of the equation. Neither of these things work. The reason this whole problem is here is because the yield curve's inverted and the rates are too damn high. They need to bring interest rates down 200 or 300 basis points as fast as possible to stop the bleeding. However, these small banks are going to have a big problem with commercial real estate, which they're never going to get off their books. Some of this stuff is going to end up getting bulldozed. And they've got other issues within their balance sheets as well. So it's very reminiscent of the 1990 kind of savings and loan crisis. I don't think it's the financial crisis. I'll come on in a sec why. So the banks are going to be under pressure. The only answer is lower rates and more cowbell, which is quantitative easing, which has already started in one way, shape or form. You know, people say this, not quantitative easing. You'll always get somebody, an actually guy on Twitter to say, well, it's not this, it's not that. Basically, the Fed balance sheet's going up. That's all we need to know, right? Is money supply increasing? That's the other thing we need to know. So the Fed will probably do 25 basis points at this meeting. It'll be the end of the hiking cycle. My guess is the next move from the Federal Reserve within 2 months will be a 100 basis point emergency cut. So I think yields are going to plummet from here. They have to. And I've written a lot about this in Global Macro Investor and Pro Macro about the problems of the interest payments of the economy. It's too long to talk about here. So that's what I think is coming. They have to steepen the yield curve as fast as possible. So I think they cut rates 200 or 300 basis points in pretty short order. So I'm talking into late summer, September or so. We will go into recession. Andreas and I have been flagging this forever. It was, in our forward-looking indicators for a long time. We go into recession. My guess is we come out the other side, i.e. we hit bottom maybe this quarter or next quarter. And then we come out the other side. The other side's going to be slow. Trend rate of GDP is slow, and it's going to be ugly and messy. But right here and right now, this banking crisis is not going to go away. And certainly by lending a bunch of big banks money and putting it onto other people's balance sheets, none of this shit's going to work. It just smells. The whole thing smells. And it's going to have to unravel in the age-old way, which is everyone's going to start panicking about the insolvencies in these firms, whether it's deposit flights or their books. And in the end, the Fed has to come with a cowbell.
Moreover, Bitcoin has decoupled from United States stocks for the first time in a year, with its price rising about 65% versus S&P 500's 2.5% gains and Nasdaq's 15% decline in 2023. Wall Street banks lose $100 billion in 2023. The 6 largest U.S. banks, JP Chase, Bank of America, Citigroup, Wells Fargo, Morgan Stanley, and Goldman Sachs, have lost nearly $100 billion in market valuation since the year's start. According to data gathered by companies marketcap.com, Bank of America's stock is the worst performer among the Wall Street banking players, with a nearly 17% YTD drop in valuation. Goldman Sachs trails with an almost 12% YTD decrease, followed by Wells Fargo, 9.74%, JP Chase, 6.59%, Citi, 3.62%, and Morgan Stanley, 0.84%.
If it's right, I've done a ton of banking crises in my life. The outcome is always the same 100% of the time. Emergency rate cuts as fast as you can. Now, we're not there yet, but once we get the next leg lower in these banks, they didn't close well today, and the bond yields, 10 years closed on its lows. Once we see the next leg of that, which is why I've got the Buy Bonds, Wear Diamonds t-shirt, because the only thing you do in a situation like this is buy bonds. Once it makes the next leg lower, that's going to set the alarms off. We've got to get through the Fed meeting. I also, which is very controversial, I'm very bullish equities because more cowbell. If you debase the currency, equities go up. So I'm very bullish crypto, very bullish bonds, very bullish technology stocks in particular. So economic growth, we're going into recession. I think it's more like 1990 recession, which was pretty nasty. It didn't, the stock market fell 20% that time. Bond yields collapsed. The banking system was creaking at the seams. Commercial real estate took 4 years to recover. Jobs took a long time to recover. I think that's what we're doing. But I think it's, again, a lot of people are looking at 2008 or 2000 saying it's going to be something like this. I don't think it is. I think it's a traditional recession with credit contraction that creates an overhang in some parts of the economy. So I think we go down fast, take a long time to recover, because commercial real estate is stuck on all of these small banks' books. And I was sitting down with the commercial real estate portfolio manager for one of the biggest pension funds in the United States 3 days ago. And he's like, some of this stuff is never going to get used and never going to be sold. They're going to literally have to bulldozer it down. He said it's already seeing it in many cities in the US, is that people just aren't going back to work. Look at Real Vision. Maggie, when's the last time you went to the office in New York? We're stuck in a lease. We reduced it from 65 people to a 35-person lease, and still 2 or 3 people go to the office. Even here in Cayman, it's only a 5-minute journey for us. There's 2 people in the office. No, it's finished. They're stuck. And those losses are going to have to get eaten by the pension system because they own it.
The rise of Bitcoin in the face of a growing U.S. banking crisis is similar to how it reacted during banking collapses in Cyprus and Greece. BTC's price grew by up to 5,000% amid the Cyprus financial crisis in 2013, prompted by the exposure of Cypriot banks to over-leveraged regional real estate companies. The situation was so dire in March 2013 that Cyprus authorities closed all banks to avoid a bank run. When Greece faced a similar crisis in 2015 and imposed capital controls on citizens to avoid a bank run, Bitcoin's price gained 150%.
And the lending's been done by the small banks. So they're the main lenders of commercial real estate. So this is that linkage. The only other one that I haven't understood, Andreas, I know your view on this, is I'm really surprised insurance companies haven't blown up here, because somebody's got the bond market very wrong. And my guess is the insurance companies somewhere down the track have got something wrong here. Now, we all understand the supply shortages, but demand wins every time. Everyone forgets this. I had a great conversation with, as ever, Dwight Anderson, who's like the world's best commodity hedge fund manager. And he's like, yeah, I'm bullish on oil on a structural supply story, but you got to factor in demand. And in a recession, nobody uses oil. We've got stuff like excess inventories everywhere. So that means industrial production slows down. And if there's excess inventories, then industrial production in Asia slows down as well. So there's going to be less demand for oil. I mean, all of the commodity prices now en masse are down year on year. They're negative. So that's deflation. I do not see a single shred of evidence to suggest that inflation is sticky. I think it's a false narrative. And it's going to get taken out and shot over this next few months.
So, what are your thoughts about the Silicon Valley Bank collapse? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.